Human emotions are complex mental states that arise as a result of psychological, cognitive, and environmental factors. They can be broadly categorized into basic emotions like happiness, sadness, and anger, and complex ones like guilt, shame, and pride, which can vary in intensity and duration. In this video, I'm going to talk about each emotion that we all have experienced somewhere in our trading journey. I will examine the causes of these emotions and how we can deal with them. Alright, I'm starting with the most common one, greed. As a famous quote says, man, as a result of living in a world with limited resources, is a rational self maximizer. He always aims to maximize his self interest and satisfaction, which is essentially greed. As a trader, you're constantly trying to make the most out of the market without paying attention to your limited power and resources in such a gigantic market. Now, what are the greed symptoms in a trader? Well, you might risk more than you should. You hold on to your losing trades and winning trades way longer than you have to, and you enter the markets that you have no information about. In order to mitigate the impacts of greed on your trades, you have to plan your trading scenarios before you actually start trading. Let me demonstrate this with an example. Let's assume that you want to trade Euro USD. You say, okay, I will take a long position at this level and I will come out of the trade if the price hits this resistance level. So when the price gets to this level, your grid tells you that this was an easy trade for you. You have to hold it longer. But you have to remind yourself of what you planned before opening this trade and acknowledge that you're just being greedy, since your current plan contradicts your original one. The next one is hope. Hope is like a sword in your hand. You can utilize it to eliminate your enemies, or you can commit an unwanted suicide. Well, maybe that was too epic of a metaphor. But what I meant by that is when you have a clear and back-tested trading strategy in combination with a proper risk management system, hope is something to help you stick with your trading strategy when it's not doing so well and you're experiencing consecutive losing trades. On the other hand, hope could be fatal to your trading account if you ignore all the technical and fundamental principles and insist on just one trade that you believe is going to make you rich. Now, let's talk about fear. It often brings itself to the fore as fear of missing out or FOMO. It simply means that the trader is afraid to miss out on a market's noticeable move while others are benefiting from it. Your brain perceives FOMO as a threat, so your brain's functionality automatically shifts from your frontal cortex, which is responsible for many important functions such as planning, reasoning, decision making, emotion regulation, and voluntary movement control, to your limbic system, which is responsible for motivation, reward, and emotion processing. Therefore, you will be making less logical and more emotional decisions. Someone might say, just ignore FOMO if you know it's FOMO. What I say though, let your FOMO speak to you. Then you have to sit back and say, okay, you tell me to enter a position that I don't know much about. I'll answer you after I do a full investigation on the asset, and if it meets all the criteria that I have in my trading plan, then yes, I'll trade it. Otherwise, it's not for me. Are you a
Everything's crooked. Reality is poison.
or a
What a beautiful place. What a great night.
type of person? Yes, I'm talking about optimism and pessimism. As traders, we must see the glass of water empty as much as we see it full. This means we ought to stay neutral. Otherwise, we decide and act with biases. And based on these biases, we're going to risk more on the trades we are more optimistic about and risk less on the trades we are more pessimistic about. When in reality, our fundamental and technical knowledge should be the only factors to tune our risk percentage based on. What do you think of these pictures? Love and hate. Love in the context of trading refers to developing an emotional bond with a particular asset due to its past profitability. This attachment can lead traders to enter positions solely based on their emotional connection, rather than relying on objective market analysis and strategic planning. Conversely, hate in trading manifests as an aversion to a particular asset due to its previous losses. This negative emotional response may prevent traders from capitalizing on market opportunities, even when the market conditions are favorable. Allowing past experiences to dictate trading decisions can cloud judgment and hinders a trader's adaptability to changing market dynamics. So you constantly need to remind yourself that you are attached and love an asset just because you did good on it, and hate one just because you had losses. And from any moment in time, this could reverse. Hi Jack, I can take your retirement pension and make it double in the course of 6 months trading the Forex market. After 6 months, I'm sorry, Jack, I lost all your money. I only had good intentions and wanted to help you. This scheme best describes Mike's feeling guilty. It's actually one of the worst emotions a trader can experience in his career. It can be so intense that could end a trader's career. The solution, though, is fairly simple and sort of a cliche. Don't accept and rely on someone else's money, especially when you're at the first stages of your trading journey.
Pressing your forehead can help reduce anxiety and stress. Traders.
Two main elements may cause severe anxiety in traders. One is the abundance of data. We are literally bombarded with news every day, which pour an enormous amount of data in our brains, which can cause distraction and confusion. This conflicting data causes our brain to develop multiple perceptions of reality, which may lead to anxiety. The second main cause is setting unrealistic expectations or goals. Being a perfectionist like me can cause anxiety because the reality is always far from what you have built in your imagination. One approach to cope with that is treating trading like a business and trying to compare it with other businesses to see how gradually and slowly they may grow and how low the possibility of success is for them.
Revenge.
Often comes up when you take some conditions for granted. For example, you are so sure about the trade to hit your take profit. When it hits your stop loss instead, you think the market has robbed you and try to take revenge on the market. But the truth is, you are only taking revenge on yourself because the market is always and will be stronger than you. To overcome this bothering emotion, you need to remind yourself these statements. Market does not know shit about where it's going in the future. Neither do I. And everything is transitory, even the sun. So I would better accept the reality that every winning trade can turn into a losing one in less than a second. Humans prefer an electric shock to being left alone with their thoughts. One psychologist did an interesting experiment. They have 55 participants seated in a quiet, empty room alone, with nothing to play around, except a button that would deliver an electric shock to the participant, which previously described as unpleasant. 65% of men and 25% of women chose to shock themselves instead of simply sitting quietly. Does it not sound familiar? As traders, we cannot always see opportunities to trade. So most of the time, we have to sit back and relax and wait for the right moment to show up. But our brains do not like it. They stimulate our bodies to take action and get into unnecessary trades, which most of the time cause big losses. To avoid this, we need to teach ourselves new hobbies to enjoy instead of wasting time on the chart and staring into the screen like an owl. As a trader, you spend a lot of your time alone. This loneliness gradually fosters a sense of negative passive nihilism inside you. It refers to a state where you embrace nihilistic beliefs about the meaninglessness of life, while adopting a passive attitude toward your existence. You may see no point in actively engaging with the world, pursuing your goals, or trying to change your circumstances. as you believe that ultimately everything is insignificant. This can lead to a sense of apathy, detachment, and resignation in the face of life's challenges. As an active solution, you have to dedicate some of your time engaging in social activities. And by that, I don't mean playing PUBG. I mean real physical activities, such as group fitness classes or hanging out with your friends in a cafe. Have you ever wondered how many times you said shoulda, woulda, coulda when you were trading? These comments reflect regret. It occurs most frequently when you set your stop loss and the price takes your stop loss by 1 or 2 ticks. Then you would blame yourself for not moving the stop loss a little bit further. Another scenario is when you open a trade with a certain position size relatively small to your account size, and it turns out to be a perfect trade and hits your take profit. Then you would regret that you should have doubled your position size on that trade. While you might experience all these emotions at the same time, you need to remind yourself that what you did in the first place, that now you think was wrong, was said to be done by your trading rules. Hence, there shouldn't be any regrets that matter to you. Have you ever been waiting a week or a month for a trading opportunity and missed it because you had to do other things, or you entered too early and took a loss instead of a profit? Well, that must be frustrating. How can you deal with it? Well, the answer is you have to seek some form of relief. But almost every single time, relief cannot be found by taking immediate or impulsive actions. Rather, it can be obtained by patience and letting the market give you another trading possibility. So, whenever you get frustrated, move away from the chart, sit back, and put things into perspective. Once you fully figure out your next trading scenario, look for it on the chart, and as soon as you see the sign, pull the trigger. Hopefully, this way you can find the relief you promised yourself. Elation. This is one of the emotions that is rarely talked about in trading communities, and it may not be as charming as the title implies. You can deeply feel these emotions when you're on a winning streak, and you think you're on top of the world, you're a genius, or some kind of ancient Greece goddess. And this is exactly the problem with this emotion. The moment you feel invincible, you start taking trades with excess risk that, if go wrong, could wipe out all the profits you made. The cure for that is to give yourself small prizes for your winning trades, but they should be out of your trading plans. You should not give yourself permission to open random trades after a winning streak. Instead, you can buy yourself a coffee, go to your favorite club, or take a trip. By doing so, you appreciate yourself for being such a badass trader and prevent the negative consequences of arrogance at the same time. The last but not least is apathy. Let me explain when you feel a perfect form of apathy. It's when your plans have gone wrong for too long. You find the right asset, you wait for the right price to enter, you calculate your risk and position size, and you enter the market. But unfortunately, you keep taking stops over and over and over again. It's at this moment that you go off the rails and don't abide by your trading rules, and you don't care about risk management anymore. To combat this sense of apathy, you need to remind yourself that trading is just a game. It's a game of probabilities. And you might get as many losing streaks as winning ones. And now your name is on the losing side of the coin. But soon enough, it will be on the right track. What emotions did I miss that I could add to the list? Please let me know in the comments below. Thanks for watching, and I'll see you in the next one.